Welcome back. Interest rates are on the way down, so what does this mean for you? Let's chat about it. Welcome to Mind Over Money. Season 3. G'day, boys. How we going? Wait, no, we're at Season 4. Yeah, Season 4. Here we go. Off to a good start. Hey, Archie. Hey, Tim.
You surviving into February?
Made it. Everyone's still on track with their New Year's resolutions. How do you pronounce it? New Year's resolutions.
G'day, Tim. G'day, Lachy. I don't make any resolutions, so I'm definitely on track.
Yeah. Still at the gym, Tim? Haven't seen you around lately at the gym. What's going on?
I go earlier now. Just quiet.
Yeah, it is pretty busy, those gyms right now.
It's
cool.
Mental. Yeah.
Well, we thought we'd kick off this season actually a week earlier because something happened this week. If you haven't maybe been living under a rock, but the interest rate got cut on the cash rate and the media went for a spectacle, and everyone's been talking about it in the news and you can see it on social media. Archie, what's going on? Is the world upside down? You'd think Mother Teresa's come back from the grave. Like, what's going on, mate?
Well, the first thing to say is don't focus on interest rates.
Here we go. Breaking news.
Yeah, and obviously because of all the hype and the media hype and that, people do focus on interest rates. And if you want to pay off your home, the number one thing you've got to do is not focus on interest rates. You've actually got to have a strategy and you've got to work through how you're going to pay off your home loan. And if you pay off your home loan in 10 years, which a lot of our clients can do, you're going to save yourself bucket loads of money. And the interest rate really doesn't matter. But you've got to have a strategy. So people who are really tight on the finances, interest rates are very important. Okay. So I was just saying to some brokers last week is that, we're going to get a lot of interest in people wanting to change their interest rate because they need to get some more money back in their pocket again because everything has gone so expensive, so crazy. And, what have we basically seen things double in the last 5 years? So car prices have doubled, the housing costs are doubling, everything's just doubling in the last 5 years. So if we're tight, we're going to be looking for a better interest rate because it can put some money back in your pocket again there.
Well, is one basis point going to make a big difference to the everyday Aussie, do you think, Archie? Or
the 0.25 that they dropped it by.
Yes.
Yeah. It'll make some difference. Even if you're going for a home loan to buy a place, it's going to improve your borrowing capacity. So it's going to make a difference there as well. But, the thing is, the Australian finance industry, it's in a mess. The government keeps interfering, and because they keep interfering with dropping interest rates, raising interest rates, making all these rules around home loans, it's just made the whole industry a mess. And so it's pushing people around, and it's led to a lot of wasted time, a lot of wasted money, and a lot more debt for people. That's the problem we're facing in the Australian industry. You go to other countries, like our son that lives in Taiwan, they pay 2% interest on their home loan. It's a 30-year home loan. They don't have to worry about trying to pay it off more than 30 years because at 2%, locked in on the loan, it's no worries to pay it off over the next 30 years. And the banks are happy and the people are happy.
Similar in America. Yeah. Seems like in the Asian cultures too, they have a bit more of a philosophy around a home as a place to live. You're not trying to speculate as much.
Asians also think about investing. So they as a government, as a society, they go, look, let's not pay too much for a home, and then we can invest all this money in our companies, businesses, and we can grow the economy. Australia has way too much focus on property, which doesn't do anything, doesn't produce anything, doesn't make anything.
Not productive. Yeah. All the wealth's in the home.
And as a country, it's hurting us. It's hurting us big time.
Yeah.
Now, the other thing is for people, when we say don't focus on the interest rate, some people, especially our clients, have already got a discounted interest rate. So we've got them with a bank that provides a proper interest rate, doesn't stuff around and have all these, bells and whistles that, moving parts and, pretending that they're giving you something, but they're not giving you something. We go with banks that just provide a discounted interest rate. As interest rates change, these banks drop their interest rates over time. They don't do it straight away, but they do it over time. And basically, you got to go back and start comparing with the standard variable interest rate. So a lot of our clients are on 6.09 to maybe 6.24% discounted interest rates, whereas the standard variable rate offered by the Big Four and other banks is anywhere between 6.84 and 9.4%. So, basically what we've got now is, the Big Four saying how wonderful they are because they've dropped the standard variable interest rate, but they've dropped it from 9.4 to 9.2, or is it 9.15 or something, and it's basically, it's pretend. It's like, let's pretend that we're doing something here. Yeah. But most of their clients are going to be on discounted interest rates, which they won't touch. So we're not going to see a drop.
Interesting.
When there's a rate increase, you'll see that on your home loan spreadsheet, your home loan statement for the month. They'll bump you up as soon as that is necessary. But whenever there's a decrease, you won't see that until maybe you ask. And even if you ask until you kind of threaten to leave is when maybe they'll drop your rate.
Yeah, it depends on which bank you're with. So as I was saying, like with the banks that we use, when we're helping clients, we're going with a straight, it's the bank has basically one product. It's a discounted rate, and that's the rate you have. So so that rate will change depending on what's happening with interest rates, and it goes up and down. But when you start dealing with the Big Four banks and some of the other banks, they muck around with the interest rate. They pretend they're providing you with something really good, but then quite often they're trying to maximize what they're charging you. And so we'll quite often see people, paying that 6.84% when our clients are sitting on 6.09. So, in Australia, it's all this pretend play games. It's all about sales, try and sell a new product. So let's create a new product. Let's sell that product. That's what our banks do.
So it's a marketing ploy.
Yeah.
And you see those advertised rates, Archie, for things like standard and lower variable discounted rates. What does that all mean? And how do you kind of sift through the options there?
Yeah. So just looking at some of the banks there today, you got ANZ, CBA, NAB, Westpac, Macquarie, Great Southern Bank, Bendigo Bank, Bankwest. These guys are all saying that they're dropping their standard variable rate and whatever their advertised standard variable rate is, which is somewhere between 6.84% and 9.4%. So that's what they're advertising. So they're saying we're dropping our interest rate, and it's basically just that standard advertised rate. Now, when you start looking at people's home loans, their home loan rate could be very different. They might be on 6.5%, they might be on 7% or 8%. It's something different to that variable rate. And so therefore the bank doesn't have to pass on the discount. So even though interest rates have dropped with the Reserve Bank, the banks don't actually have to pass that on to those specific products. Yeah. So if we're looking at banks who have passed on the rate cut already to their customers, it's banks like Resimac. Banks that we expect to see coming through would be some of the NAB products. Advantage, Ubank have dropped theirs. Wave Money have dropped theirs. So, so there are some banks that actually do, look after the customer and provide the customer with a straightforward product. And, you know that it goes up and down, based on what's happening in the market, and you don't have to usually chase them.
Yeah, great.
That's the first thing to note, I guess, is there's a difference between the standard and the discount and the advertised rate. And there's all these other different types of rates based on the type of product that you have, not just what the type of bank you have. So you really got to figure out what loan you're actually with. What about a fixed rate? I imagine that a fixed rate, there's no change.
No.
Yeah.
No. So fixed rate home loan, the bank is selling that loan to an investor. And so whatever that fixed rate is, that's what you've got. Yeah.
Yeah.
And for whatever period of time that you took that fixed rate for. Now, again, the banks like using fixed rates because one, they can try and lock you in on their product, but also it enables them to sell that loan on so they can lend more money. So it's a win-win for them and not a win for you. I know some people, locked in some very low interest rates, which are, have been coming off over the last year or 2 years. Others are still going to come off over the next 12 months to 18 months, who are sitting on 2 or 3% interest rates. And, so they've gone through this whole big interest rate rise, sitting there going, great, hasn't affected us. But when you come off it and your repayments double, it hurts like hell.
Yeah. Gotta brace yourself.
Yeah. Yep.
If you're sitting with that, well, maybe you're on a low 6% rate at the moment, what would you suggest people do? Or what's the mindset to have when you're hearing all this news? Because my YouTube feed is just bombarded with this at the moment. It's just everyone's talking about it as if like the world has changed, but really it's a basis point. Like it's like the narrative is it's because of you Aussies, everyday battlers getting out there and tightening the belt. But the reality is it's still tight out there. But what would you suggest the average person? They're still on a pretty decent rate. Do they chop and change? Do they go out shopping? Do they chill?
Yeah, as I said at the beginning, don't do anything. And don't focus on the interest rate. You've really got to focus on how are you going to repay your home loan? What sort of strategy are you putting in place to repay your home loan? And look, everyone's in different positions. You might have little kids, have just started a family, and so money can be quite tight. But you can still put a plan in place and still pick appropriate home loans and set those up in a way that you're going to still be able to pay it off over, say, 10 years. But you got to work it through and figure out what your goals are and what that's going to actually do for you. So especially if you pay it off in 10 years and it drops 20 grand a year back in your pocket or 30 grand a year back in your pocket to spend on the family, you might be quite prepared while the kids are little to go without a few things to get that home loan paid off and, have all that extra money when they're teenagers and you can start, you can do travel and all sorts of stuff and education and that you'll actually really need that money for. So, yeah. So don't be in a rush to go out and change anything just to get a better interest rate. It's think about where you're at and what's going to be in your best interest and really be careful about refinancing because you might be restarting your whole home loan again and have lost the last 5 or 10 years because you keep restarting your home loan because we don't pay very much off in the beginning. And every time we do a home loan, it costs money. And we restart it again and we restart the 30-year period again and we go back to paying very little off the loan again.
Yeah. That's when you need to talk with a good broker who's going to break down the true costs and have a strategy. I love what you're saying there, Archie. Have that long-term strategy because when it comes to this emotional time, which let's face it, it's emotional, there's FOMO, there's excitement.
Yep.
You got to just have a way to remove your emotion from it or else you're going to make emotional decisions, which like you said, you can reset. You can reset yourself. Sometimes changing a loan at this rate might not be worth all the fees. Yeah. And you set yourself back years.
The thing to watch here for is if you go to the bank direct, the bank has no obligation to show you anything about your situation or whether the loan is going to put you in a better place or not. So banks have it pretty easy when it comes to, writing a home loan for you. But if you go through a broker has an obligation to show you what it's actually going to cost you. Will you actually be better off? There's programs that brokers use to run the figures and see what the difference is, and whether you're actually going to get ahead by making the change or not. And that's an obligation that's on brokers. And so you should get a better deal when you go through a broker to, they should be checking that. But you still got to be really wary, because there has been a lot of churning in our industry, average of, turning loans over every 2 years and changing home loans. And, that's not how you pay off a home loan.
Mm.
And when you're talking emotions there, Tim, is that, when we're refinancing, sometimes we'll think, well, let's make it worthwhile. Let's buy a car.
Just thinking
let's
about this. Yeah.
let's rip some of that equity out of the house and buy a car or go on a holiday or whatever.
We're improving the asset, Archie. Putting a new bathroom in. It's improving the asset.
Yes.
Sometimes.
I only ever do that just before I sell.
Right. Yeah. You're right, with that temptation is there. I think you're just setting yourself up to dip into the piggy bank or the non-existent piggy bank. And
then you find yourself with more debt, more repayments, and being worse off. And look, the banks, especially our big banks, their goal is to sell debt. That's their goal. That's their focus. Their goal isn't to help you. Their goal is to sell debt. That's where they make their money. So
it's a good first principles thing to keep in mind with debt and finance. Yeah.
Yeah. Sure. Yep. And like people still say to me, I've been loyal to my bank. They should look after me. Banks don't have loyalty. There's no such thing as loyalty with a bank. That's a mindset you got to get rid of. They are there for one purpose, and that is just to make money and to sell loans.
Yeah.
So,
and it's not good or evil. It's not a value judgment. It is just what they do. And that's why on our side, we got to be emotionless as well and be like, what's the best product for us? And I guess because sometimes that loyalty to a particular bank could hurt you in the long run.
As I said, there's standard variable rates out there at the moment at over 9%. And we do come across them. We come across people who are paying 9%. Back when people were paying 2 and 3%, we were finding people paying 9% interest because they were loyal to their bank and they thought the bank was looking after them. So,
Wrong. Should we finish with some tips just to wrap this up? Archie, Tim, what are your hot tips right now? What should people do?
Well, for most of our clients, you're already on a discounted rate, so there's nothing to do.
Okay.
So, and we will keep a check on it to make sure that you are getting the best deal.
Yeah. Don't text us every day.
Yeah. Yeah. You don't need to send us anything. Yeah. Yep. For people in the big four, you should be calling the bank and asking them for a rate reduction on your home loan. Yep. Find out what your interest rate is and asking them for a rate reduction. As I said before, the current discounted rates are 6.09 to about 6.24 for a home loan, owner-occupied.
That's at February 19th, 2025. Just want to preface that.
So if they can offer you something similar or better, fantastic, but you've got to chase them because the big four or big five will not chase you. So you'll have to chase them up for that. They used to allow us brokers to do it, but they don't let us do it anymore. So you can't really go through your broker to get a better interest rate now. You've really got to chase the bank itself. There's some silly government stuff that's gone on there that allowed the banks to ignore us and made it that it was up to the client to call, and then they've got 30 days to respond.
I think what you're saying, Archie, is they can have their cake and eat it too. That's what you're trying to say. Yeah.
Well, and just on that, like a little part where we've found success with clients is if they're not giving it anything, banks have the retention teams. And if you mention something like a mortgage discharge, meaning you're hinting that you might be refinancing, you might find they'll be a bit more able to to swing things in your direction. So if you just mention, look, I want a discharge, they'll freak out. You'll go straight to the retention team that have a little bit more power to retain you and offer you a better rate. So that's something we've found.
Tim, that's absolutely spot on. Tell the bank when you ring them up that you're going to change home loans, and that you want a mortgage discharge, and they will definitely put you through the retention team.
There you go.
Now, but that's not for our clients. That's for the big four, the big five.
Yeah, sure. Yeah. If you actually have a higher rate than what is out there. So it's definitely worth reaching out and asking, look, this is my rate. Is it competitive? And
you've also got to know like what your LVR is, what your situation is. And I think the sad reality is a lot of people don't know that. Unless you've been working with a really great broker that's help you understand your financial situation and also where you're at in your repayment schedule with getting your home loan paid down. I guess we come back to strategy again. Are you on track with your strategy?
I recently saw a little marketing campaign by a broker and a business saying that if you're not on a 5.49 rate, you're missing out. And that was it. And it would just leave people thinking, why am I not on that rate?
Zero detail.
But there's a lot of context, like LVR is a very specific product.
Yeah.
And I think that's a great point. Like, I think there's a lot of people trying to get your emotions going and make you feel like you're missing out. And the ad was not helpful, I think, for the average person. So that is good advice.
Good tip.
Yeah, Lachy.
My last tip is if you're cheesed off about the property market, which I'm totally cheesed off about the property market and the way the government keeps interfering with property finances in Australia compared to other countries. And in other countries, you can see people doing so much better because the government has a lot less interference. And I think it's time, we all started writing to our local MPs and our federal MPs and started telling them, hey, this is not on anymore. It's not on with all the mucking around that you guys do with our property market. It's not on that you let foreigners come in and buy our property market, especially when, if we look at Asia and there's 4 billion of them and they don't let us in there. And there's a hell of a lot more millionaires in Asia than there is in Australia. So it's very easy for them to buy up Australia.
So we need some sort of protections in our domestic market can be free. Yeah. But not on a global stage.
Yeah,
fair point. Well, it's definitely something both major parties are taking seriously. Obviously, the Liberals in the upcoming election campaign are talking about banning foreign buyers for 2 years, and now the Labor have now matched that in their campaign offerings. So it seems like there's been a lot of public pressure on this. Of course, that's only one part of the housing market issue. We've got supply shortages and other factors we have to work through. But I think writing to your local MP is a great idea. And just making your voice heard. We all need to see some change happen. Maybe some less interference too from the government. Be nice.
Yeah. And our last tip is we need to also get on to our MPs about stamp duty on home insurance because
what a scam.
It's a scam, and it's our home insurances are going up. They're just increasing greatly. Our insurance industry isn't doing well, and so it's time that the government started to look after it and made sure that our insurance industry is doing well.
Yeah, get your fingers out of the pie, government.
Yes.
Penalising people for insuring their own home, which they do with their rego and car, and they just stick their stamp duty everywhere.
Yeah.
It's classic.
Cool. Well, that's
all
us.
right. Awesome.
We've had our fun and our rant.
Yeah. Set the tone for
I feel
season
there's more
4.
to be said, but for time's sake, let's.
We've actually got a really positive season lined up. But we thought we had to hit the nail on with what's going on with these rate cuts and all the noise. So welcome back to season 4 of Mind Over Money. And obviously today was not financial advice, so education purposes only, information purposes, and entertainment purposes, really. So we hope today was entertaining and helpful and practical, but please go get advice for your situation from a team of experts. You can talk to us, waymakerfinance.com.au, to get advice around your home loan. We have a team of mortgage brokers. And we do financial coaching, so we can help you with your cash flow. We can help you understand your finances and find ways forward through our financial coaching. Okay, guys. Catch you later.
That's us.
Thanks.
Beautiful.
See you later.
Thanks, Tim. Thanks, Lachy.